education and entrepreneurship. Her expertise and dedication make her a valuable addition to this panel. And Linda Hampton, who has been a leading force in credit education and understands the profound impact of credit on one's final journey. Her insights will undoubtedly guide us through the complexities of achieving credit worthiness. Joining us today is Jay Beal, the CEO of Inc. Education and founder CEO of the Jay Beal brand. Jay's expertise in education, business consulting, credit consulting, and real estate will provide invaluable insights into navigating the path to business credit worthiness. His commitment to promoting education and supporting Black-owned private tutoring companies is truly commendable. Jay Beal has been recognized as a Forbes Next 1000 list maker and has garnered a significant media attention for his contributions to education and credit. His dedication to closing achievement gaps and creating opportunities for all students aligns perfectly with the theme of our session today. Please join me in extending a warm welcome to Jay Beal and our esteemed panelists as they share their knowledge and experiences in unlocking the secrets to credit success. We look forward to a stimulating and informative discussion that will empower businesses and individuals alike in their pursuit of credit worthiness. And please welcome back our moderator, Terrence Height. As a reminder, Terrence has extensive experience in healthcare and entrepreneurship, making him an ideal facilitator for our discussion on credit success.
Awesome. So we can go ahead and jump in and get started. So the first question for the panel here today is, can you briefly explain the importance of business credit worthiness and how it affects a company's financial health?
So a business credit worthiness is very important. And so what a lot of people don't know is before you start getting the business credit, the personal credit first is key. Because oftentimes when you're starting to establish that business credit, you're required to have like a personal guarantee. So I would say making sure that your personal credit is very top-notch and superb before starting your business credit. So that's what I have about the business credit.
All right, first of all, so how many of y'all have excellent personal credit close to it at this very moment in time? Okay, all right, good. How many are right in the tier roughly below that, I say? All right, cool. So we're in a mode of trying to build, right? So first off, I would say the business credit is, like she said, is important, but before we even tap into that, let's talk about the personal credit items, right? Personal credit for a while, I used to work for Experian, the credit agency, a while back in some banks. And I believe it takes a while for you to really matriculate into building that personal credit the way you want and building that personal profile. I think I just checked the other day, it was roughly around 844, so I know I'm doing the right things to make sure that we get where we need to in personal credit. First of all, how many of y'all heard about the utilization rate of 30%? About getting great personal credit, right? That technically, while true, you really should be roughly around 10% or under 10% to get the most available points from the FICO credit scoring algorithm to make sure that your credit is supposed to be where it needs to be, right? When you're building your credit. So that's one thing, make sure that you're getting below 10% if possible. Also, how many of you guys have heard about the unwritten rule, whether we learned this at the agency level and in your personal life about paying your bills a certain way, or paying your credit card bills a certain way? How many of y'all know about a rule called the 90-10 rule? Have you ever heard of it before? All right, so those that don't know what the 90-10 rule is, you take your credit card statement, right? You have 2 dates. You have a statement date and you have a payment date. What you're supposed to do is you're supposed to take 90% of what you owe on that statement date and pay that first. Then the 10% comes to the payment date after, which is normally about 2 weeks behind where your statement date is. What that does is it gives you the most allotted maximum points from the algorithm per month, as now the credit agencies take 6 months of traction when they're giving you. Oh yeah, sorry. So so when you're following the 90-10 rule, you pay 90% of what you owe, right, by what they call the statement date. Once you do that, 2 weeks later is normally where the payment date is, where you pay the other 10%. It's called the 90-10 rule. What that does is it takes the maximum allotted points from the FICO algorithm, and we're talking about mostly 8 and 9. FICO 10T was something that was developed a little bit later, but FICO 8 and 9, it gives you those maximum amount of points for your algorithm so you can get the highest score possible per month. Credit agencies want you to have 6 months of traction at a given time for you to build your credit the way it's supposed to. Now, of course, you have different things as part of your profile. You have your loans, right? You have your lines of credit. You might have student loans. You might have car loans. You might have mortgages. You may have your apartments on there as well. Now, while it's not required, you still need to have some of those things that's partly embedded into your credit profile, all right? So those are some of the trade lines that you should have from a personal credit reporting perspective. But those are not all the things that you need to do to make sure you have great personal credit. You need to make sure you're paying stuff on time. Preferably pay it ahead of schedule. Now I know we're all not in the same financial situations at times to be able to do that, but you should have a goal keep to make sure that you're doing something like that, so you're again getting the most allotted points as possible. Now, as we're transitioning from the personal credit too, and I'll let Sharita come in here to kind of give you more insight on that as well, but when you're transitioning into business credit, some banks, I know Wells Fargo specifically too, unless you don't already have 2 years of personal credit, 2 years of business credit already under your belt, they're gonna make you have a personal guarantee or a PG. If your personal credit isn't on point, right, you're not gonna be able to get the beginning parts of getting business credit to make your journey more successful. Now, once you get into that, you have to build more trade lines into your business credit, right? So you might have to have vendors and other companies that you want to do business with and partners. You have to kind of gather, I would say, more data, if you will, to make sure that you're able to build your trade lines up on the business credit side. But at the same point in time, you got a couple of different factors that build into that as well. And it's about how do you build your credit score on an experience side? How do you build the Dun & Bradstreet, the DMV score? How do you even start to get the business credit? Well, you got to have your business registered. You got to have an EIN. You gotta have the correct business name, right? You gotta have an email address, a website, all of those things, a phone number, an address, a valid one, right? A valid address, okay? Valid address is the key, right? You can have some virtual addresses as well, but you don't wanna have a PO box as your address. So those are some of the key things in the beginning of business credit. We'll elaborate here in a little bit on how you wanna start to build. I'm gonna pass the street and kind of give you some more tips as well.
Okay, so thank you, Jay, and thank you, Linda. One of the things is that we try to teach from a simple yet effective way to be able to do things. And everybody wants business credit because it became the new sexy, especially during the pandemic. But one of the things is when you start thinking about business credit is, do you understand the players? Because just like personal credit, there's bureaus with it. Do you understand who else plays a huge role? Because everybody's concerned with D&B. But what about Experian? Because Experian is the one that most of your vendors, that most of the things that you're gonna start building business credit with, that's the one that you should be paying close attention to. Don't negate Equifax because they're still a player. But one of the things is when you're starting to think about business credit, we're not thinking about capital, we're thinking about credit. But one of the things is we start to leave money on the table, and all three of us we operate on OPM, other people's money. And so one of the things that you want to start to think about when you're thinking about that and you're talking about Dun & Bradstreet, I want y'all to get a pen and paper down because I told you we're going to give you guys some actionable things that you can take back, is to know that, of course, that D&B goes from 0 to 100, but don't spend so much time past 80. Once you get a score of 80 with D&B, that's when you want to really start to take your scores and kind of utilize them, because 80 is the key number. Yes, 100 is good, but that's more for a flex. No one's really caring about that once you get to 80. You want to start to build and start to think about Experian. Because Experian, if you want the best rates without having to personal guarantee, you want to make sure that that score is at least at 70. Because again, from the business side of things with Experian, they run from 0 to 100. But 70 is that passing grade that's going to allow you to kind of get out of that tier of having to always personal guarantee. But of course, you want to get that score upwards. And Jay and I are on a thing, and we got a bet going that somebody's gonna pay $10,000 between me and him. We're gonna give a business, or we're gonna give one of each other $10,000, because one of the things is that we're going to do is to make sure that one of us hits 850. I'm 841 on my FICO scores, he's 844, but I'm 100 on Experian when it comes to that about my business. And so, but one of the things, the reason why we say that, and we tell you about it on the personal side, because he used to work for Experian, I can't find out what your scores are unless you give me access to them. But for the business side of things, if you have a business, I can go right to D&B and they're gonna tell me if I should do business with you. Because guess what? They're gonna tell me what your scores are. That's the thing, that's the difference that a lot of people don't realize, is that if you don't pay your vendors, if you're not paying the companies that you're doing business with, guess what? They're gonna tell your counterparts that how you do business. Because they are reporting that. And although all of them don't report, the major ones do. And if you can't pay the major ones, you're probably not paying the minors. And so that is another thing to kind of just think about when you're thinking about business credit. You want to make sure that the profile that's out there is the best profile that is representing your business. Because I want you guys to know something. If you get a UCC, Umbrella, Charlie on your business credit profile with DMP, your score is going to drop tremendously. It's like having a felony for your business on your, and not saying that you can't come back from it, but it is a major flag. It's almost like on the personal side of having a judgment on your personal credit report. So you want to really think about when you're going after these things, because Jay can tell you, everybody wants trade accounts. Everybody wants these. They want all of these things. But guess what? Just because they may not, the credit bureau, let's just use a credit card for example. We're gonna leave a bank name, but we're gonna say you got $10,000 with this business credit card. Most business credit cards do not report to the credit bureaus. So that is another myth that we want to debunk right now. The reason, the way that they report is that if you're late or you miss a payment. That is the only time on most personal, if you have, how many in the room have a business credit card? Have over half the room. I want you to look, I challenge you, because we like to give call to actions. Go pull up your business credit report, and if you don't know how to do that, nav.com, nav.com will show you for a very low cost to be able to look at your true scores that are being reported. The one thing that is the difference between the personal is that it's hard for most small businesses and entrepreneurs to read their business credit reports, because guess what? They're only giving you the last 4 numbers of your account. How many of us know the accounts of all the things, especially when you're trying to look at this report, and there may be something wrong, but how do you know how to be able to do this? This is why we are advocates for using things like NAP. This is not sponsored, but we use these in our own business. And we use it, why? Because NAV gives you an extra boost. They have a business loan builder. So if you're knowing that you're gonna do business with the SBA in the next 6 to 12 months, then you should sign up for a loan builder account, because that's gonna generate a SBS score, which that is the minimum score that the SBA uses to see if you're pre-qualified for an SBA loan. The minimal score is between 160 to 163. I always suggest to get that over 163 at around 165, because that's gonna make your process of being pre-approved for SBA loans a lot easier. Not saying you're gonna be guaranteed, but NAV stepped in to be able to help small businesses, especially all the under-resourced, underbanked, rural area business, veteran-owned, the LGBT, they stepped in to be able to help close the gap to help educate small businesses, but they only can do so much. So this is why Jay and I are passionate about this, because we don't want to just tell you to go use something. We want to tell you why you should be using it. But if you know for sure that you're going to need an SBA loan, you should be thinking about your business and stop asking for just the money that you need, because it's still going to be reported, because there's a lot of businesses reach out to Jay. They say we need $30,000. No, you need $100,000. Because $30,000 is what you need right now to cover what you have going on right now. And a lot of people ask us, why do we marry personal and business finance? Because they go together. If your business is very young, you are the business, you are the and you are the equity. You are the equity. And so you're funding. And so we always like to say this. Do you have, if your business is under 2 years old, you haven't filed enough taxes to be able to go into any traditional bank CDFI. The CDFI is there to be able to help you, but are you making the relationships? Because a lot of times you're not able to get the credit or the capital that you need because we don't have the right banking relationships. A bank account is not a banking relationship. And we're gonna talk about that later in the afternoon, but we're gonna go into continuing to bridge this. But your credit plays a huge role. Think of your credit as sweat equity. If nothing else, it shows the character on how you do business, and they wanna be able to see, are you a risk to the bank? Because would you, this is the question that Jay and I say to you, would you lend to you? And if you can't answer that question, to be honest, you can blink, you can write it on the paper, text yourself. If you wouldn't lend to you, most of the time, any other person, whether it's friends, family, or a banking institution, won't either.
We gonna end on that question. We gonna ask the second question, but would you lend to you? That's the question you need to understand.
Where was this panel 15 years ago when I started? That's my question.
Yo, we gonna need the game, man.
I'm up here taking notes mentally. I'm like, hey, I need this. How many of y'all saw those G-Wagons popping up during the pandemic? Use y'all's credit. Surely I wasn't the only one. Next question though. What are the factors that lenders consider when assessing a business's creditworthiness?
Man, I mean, I would say, first off, like I said before, and just to taper off of what she said earlier, if you do have how many of y'all have a Wells Fargo business credit card? All right, one thing, if you did not know on Wells Fargo actually does not report, and I actually meant to bring my other phone up here to show you guys something. I'll do that here in a little bit, but Wells Fargo does not report to the Experian agency or the Equifax agency for business. What they do report to is something called an SBFE, which is Small Business Financial Exchange. And so when you're trying to go through things and get vendor accounts and things of that nature and want things to report, Wells Fargo does not report to them. So you're not gonna get any kind of benefit there. That's why I had to kind of like think about do I wanna keep my Wells Fargo business credit card because it's not really doing me no good for reporting. It only reports to the SBFE. So just something to keep in mind as we go along. Now back to the question that he stated about what different factors, right? Basically on
What key factors lenders consider when assessing a business's creditworthiness?
So one thing is your payment history, right? The difference between personal credit and business credit on that side of the scale is that it tips a little bit more on the business side on paying things early. Not paying things on time, right? But paying things early. If you have a vendor like on Amazon, right? We have, I think, I want to say 37,000 or something like that with Amazon. On Amazon, you're able to do a net 30 or a net 60, right? You can go longer than that, but they prefer a net 30 or a net 60. So guess what happens? If I buy something from Amazon, I don't personally use Amazon. Y'all probably think like I'm crazy because I don't order like that. But I may need to order something from Amazon on the business side. When we do those kinds of things, they'll say, hey, we're gonna let you buy X amount of dollars on this. Cool, we'll buy it up front. Then they'll say, okay, 30 days later, you owe us this. Now, the goal is on the business side is to pay it. Let's say pay within 15 days. Shorten that time by 50%, your credit scoring with them particularly, right, goes up as to I know that I can trust this person, trust this business to buy this from Amazon. I'm gonna give them an allotment of more money later on just so they have that barrier, right? Like she said before, you don't wanna just borrow what you need, you wanna borrow in advance of what you need just in case something happens or an emergency pulls through. What happened with the pandemic? Many businesses fell under, right? Because they didn't have either the credit, they didn't utilize OPM or other people's money in order for them to still stay afloat, and they didn't have a backup plan. You have to ensure that you have those things in mind. So that's one thing, making sure you're ahead in paying, not on time in paying, while they're both important. Secondarily to that, you have trades, right? So when you're looking at building business credit, you want to have trades available to where you're able to build that credit efficiently. If you don't have any trade accounts or vendor accounts on your business credit report, the agency cannot get an idea of where you're going and how you're paying people, right? So you have to make sure that they do report. Some vendors don't. You gotta find the vendors that do. And the difference between personal credit and business credit is the fact that personal credit, they're gonna report out the way. Period. You go month to month, they're gonna say, okay, this person did this on this month, they're good. This person did this on this month, they're good. Business credit doesn't operate that way. You have to actually ask them sometimes, hey, did you report that? Double check. Are you gonna report that this month? Double check. Are you reporting to the agency? Double check. Because if they don't, you're running around thinking you got business credit, and you turn around like, I could have swore I had this business credit going years from now. When I looked at Wells Fargo, last year or the year before, I was like, I'm perplexed because I've been paying on my business credit card all this time, and I don't see it on my report. Oh, it's because they only report to the SBFE. That's why I'm hot, right? So you have to make sure that you have your trades, right? Make sure the trades are reporting. Make sure that you're paying ahead of schedule. Also, with business credits, people also look at the how and the what of your report too. Like, what kind of things are we paying on time? What kind of vendor accounts do we have, right? How do those show up on the report as well? So I'll say those are a couple of things you want to look at in advance. And you want to take on that, or you want to?
So,
I'm gonna let
so he talked about Terrence because he brought up the G-Wagons. Everybody, I told you, this is the panel where we just want to make sure that we give real information. How many Turos, people had fleets, they had Airbnbs, all of that was on business credit. One of the things that we're not talking about, and if you did good with that, great, but many times we're following trends. And what happened, does the trend that's happening on your favorite social media platform that we will leave unnamed, but most of the time you're following things, but they're not getting they're not giving you all the information. One of the reasons why you saw a lot of those G-Wagons, because there was social media, but they said everybody was hitting social media. If you just go get a G-Wagon and it's 6,000 pounds, you can just write that off. But were you filing taxes in the first place? That was that's a real life question to be able to ask, because most of the time they were not. And then they're like, well, why can't I apply for things that were beneficial to me? You got a G-Wagon, but you were not filing your business because you were trying to build business credit, not filing your taxes, and that's why you couldn't get an SBA loan or a PPP loan to be able to help that business to stay afloat. This will not be our last pandemic. We are still dealing with things. We are in an economic hurricane. We don't know if we're getting hit from the right, left, or both. We feel like we're in the ring with all of our favorite fighters at this financial time. So it's gonna be critical, if you're gonna use business credit, to utilize it in a way that makes sense. Because they're like, well, it doesn't matter, it's not gonna report. They say they don't report. We hear this, Jay and I, we talk to entrepreneurs all the time. We talk to accelerators. When we say we talk to people across the globe, we really do. We talk to entrepreneurs. And they're like, well, especially on the US side of things, they say, well, if I close a business, everything goes away. No. It does not go away, because you personal guaranteed that. And some of these companies will sue you for their money. We're gonna leave one, but I know something, so does Linda, because she looks at credit reports every single day, personal and business. And they think that just because the business closed, they walk away from it, that's it. That's not the case. And so when you're building business credit, and I'm gonna tell you something, the banks, their strategic partners are in these Facebook groups, social media groups. They can see what's the next trends. So we're not so removed. They may not catch on right away, but if they see too many people filing applications for a G-Wagon, or you're trying to get 5 cars in your business name and your business was just created 3 months ago, you gotta know that they're going to start to mitigate some of those things. And this is where it becomes very difficult for the businesses and the small and the entrepreneurs who are really doing business and creating business, because guess what? They start to tighten up things. So when we're starting to think about business credit and personal credit, we have to think about it in the sense. I can tell you just a couple of years ago, just to get a Shell credit card, that was nothing. Everybody had one. Everybody was driving on there. We're just using that for an example, but everybody had it. Now, guess what? You gotta go through all the steps and build your business credit before they give you a gas card. There are those small little things that used to be the census. Most people caught on it and they mismanaged what was supposed to be things out there. So it wasn't just the PPP, it wasn't just SBA. People were mismanaging business credit, so it makes it more difficult now for you to be able to get what you need to be able to move and grow your business. So now when you're thinking about it, do you really need 42 do you need 42 trade lines? No, because just like at the same thing, you look like a risk. Why do you need all of these things? Just like on the personal credit, and I'm gonna turn it over to Linda. The risk of you think about this as a small business owner and think as a lender. So the reason why we're talking about this, because this is beyond the banking. So we want to talk about the things that's going to impact what we're going to talk about later on. But would you want to see someone get 10 different things on their credit? Some of our more traditional banks have red flags, like the 524 rule. There's one bank that's out there. If you file for 5 credit cards, whether you're approved or denied, within a 24-month period, you're automatically denied in your personal credit, because they think that that's a red flag to them. They look like that you're desperate for credit. So you have to be very strategic when you're thinking about credit, because one of the things, and I'm gonna let Linda tell you, she was looking at a recent credit report about how one missed payment, because they were like, oh, they're not gonna do anything, how much it impacted their ability to be able to do things on the personal and business side.
Thank you, Sharita. So yes, one of the factors that Jay mentioned was payment history when it comes to business credit. That is a very important factor. And then also Sharita talked about the managing your business credit. So one of the things is you want to make sure that you have a strong business. You want to make sure that you have a strong profile. Thank you, Jay. You want to make sure that you have a strong profile, because what happens is, when you start to establish business credit, and then your business credit, you're not making these payments when you're supposed to, you're not paying on time, and then the business happens to plummet, then now you're stuck with all of this business debt that you can no longer pay when the business folds, and then now all of this is on your personal credit. I've seen this a lot. So with the personal credit, if you're not paying your business credit, and then they report this on your personal credit, your score itself can drop as much as 115 points. I have seen that. So you want to make sure, because you've taken this time to build up your personal credit, but then when something negative like this hits it, it takes this huge impact, and then now you're back to square one, to where you're having to build your credit up again. So really the payment history, and then just being cognizant of when you're building that business credit, making sure that you're only building what you can manage, what your business can manage, and not keeping up with those that are doing the trendy things as far as when it comes to business, on the business credit and also the personal credit.
Go ahead.
Real quick, and just this analogy, y'all. Just like you said think about like a relationship. You want, by dating, right? You want to be attractive enough, right, to be in the market when you're dating, but you don't want to be desperate for a man or a woman, right? Same thing. When you're in credit, right, you want to be attractive enough to the banks, and you want to have a profile strong enough for the banks where you don't want to be desperate for money, right? So at the same point in time, I didn't build I went the less traditional route, more than likely, for business credit. Everybody talk about going to Quill and, all the different vendors, right? Doing, she said, the Shell too, right? And the Amazons and all that. I didn't build my business credit that way. I built my business credit off the strength of my personal credit initially. So when I got my Wells Fargo business credit card, that went through, everything was cool, but I built up a high enough profile to then go, okay, let me look at city business. All right, cool, I can get city business. Let me go through Amex, right? Amex is pretty dope on how they do things as well. Then I went off of Chase business, right? The Chase Ink card, right? Then you got the Sapphire Preferred. We could talk all day about the different types of credit cards you need too. Y'all want to know what type of business credit card you should have? Y'all want to know what type of business credit card you should have in your portfolio? We're going to hit that. You might want to put on one of them questions, okay? We're going to hit that. So once we do that, right, you guys are going to want to know how many of those to get. Like she said before, the 524 is not a good situation to be in, but there are different credit cards you can get, and an account that you can get over time that do make sense. And we have a plethora of those cards here on this panel. But I built mine the non-traditional route, going through different credit cards and banks for me to have the allotment that I needed. So we're now, we're looking at 6 figures on both sides, on personal credit and business credit, right? On just a credit card specifically, on that specifically. So I built myself up over time to kind of do that. And I've been in business in my education organization for now 6.5 years. So being able to build a portfolio, what I have now is crazy as to when I first barely started. So I just want to mention that on how you don't have to go the vendor way all the time. You can also go non-traditional route of actual business credit card.
And staying on that topic, this is a great segue into the next question is, what advice would you give to business owners who struggle with their personal credit and want to improve their business's credit worthiness?
I think on the first thing, on the personal side is, make sure that your business is set up correctly to begin with. You need to make sure your entity is correct. How many of y'all, well, I know I'll just tell you my journey, because we talked about that earlier. Everybody wants to know the journey, right? So I started my organization in the middle of 2015, and I didn't have any business credit or anything like that at that time. And so for me, I had to kind of build certain things up on there, right? And when I did so, I was like, what kind of entity am I going to be? Well, I'm a sole proprietorship at first, right? Now we have 92 people across 6 cities, between Dallas, Fort Worth, Chicago, Austin, Houston, Atlanta, New York. And so now I said, there's a time when you need to move from a sole proprietorship to an LLC, right? There's a time for that. When you've grown enough and you've had at least maybe 5 to 10 people on your team, and you're like, you know what, I can't do this alone anymore. And that's one problem we have in the Black and brown community, is that we try to do our business all ourselves the whole time. You need a team behind you. And so when you're trying to build, you try to make sure that, okay, now I need to move from a sole proprietorship to an LLC. Then we move from the LLC to the S Corp. But why do we move to the S Corp? It's not because of the designation of the business, it's because of the taxation. Right? When you're an S Corp, you can be taxed differently at 15.3% as a pass-through. You don't have to worry about corporate taxation, right? You just got to worry about, okay, cool. Now I'm only being taxed one time, but I can have it as a different turn through a pass-through on my IRS taxes, and I don't have to worry about paying double, right? So making sure your entity is where it should be first. Then when you have all that set up and you go on your personal credit side, you got to make sure that that's built up, right? You need to have, if you have a credit card, you need to have at least 3 credit cards on your profile. To have a decent profile for the agencies, at least 3 credit cards, personal credit cards I'm speaking to right now. So at least 3 credit cards on your profile. Preferably, if you can make it within a span of 5 years, 3 to 5, that's it. You don't want to have more than that, okay? Don't be sitting here with 35 credit cards on your personal side and they're gonna be looking at you like, fam, what you really got going on? So just up to 5, right? Preferably 3, but 3 to 5 credit cards on the personal side you wanna have to have a good profile. Then you wanna have if you have a mortgage, you have the mortgage. You have an apartment, you have that apartment. Then you have a student loan if you have one. I didn't have any of those, but if you do have one, that's okay. And then maybe a car loan. That will build your profile enough so the agency can say, this person is creditworthy across all industries that we're looking for, okay? Percentage-wise on utilization. Like I said before, 30% is the standard for the agency, but who cares? We trying to be excellent up in here. We want to be excellent credit. We don't have excellent credit. Not good, excellent credit, right? So when you have excellent credit, guess what we're doing? We're utilizing our credit only up to a maximum of 10%. Now, me personally, I'm at 4% right now, only because I want it to be that way, right? So I can keep building, but it should be even less than that, to be honest with you. So 4%, 3 to 4% is where it should be on utilization. Then from that standpoint, you want to pay things on time, preferably ahead of schedule, but that's for the business side. On time, continuously for up to 6 months or more as a trend, because they're looking for trends. Now, once you got that once you got that personal part set up, then you go to the business, you're like, you know what? What's that song now? Victoria Bonex on My Mama, I Look Good. Yeah. Now you can sit with your credit profile talking about I look good, right? Now that you look good on My Mama, right? Now you can go ahead and move forward to that business credit, right? And now you look attractive to where the vendors can now say, okay, cool, I'm gonna give money to this business, and I can bet that they're gonna pay on time or ahead of schedule on a net 30 or a net 60 or a net 90. And those are the kind of things you want to just tap into in the beginning. So yeah, y'all want to ask questions? Okay. And I'm sorry.
Okay, no, go ahead.
How much does paying things off affect personal and or business credit?
Are you talking about things in collections or paying it off?
No, just paying it off. Like I don't have a car note anymore.
Gotcha.
Well ahead of time. So is that damaging or is that?
So here's what happens when you pay stuff off all the way. When you pay things off, what initially happens on the credit agency perspective is that your score initially, it goes down a little bit. Why? Because you don't have the allotted amount of credit profile, what's the word I'm looking for? Accounts, if you will, right? On your credit report anymore, right? So now, you have to wait a little bit, about 60 days. It's okay, just wait period. After 60 days, your credit score will go back up because now that trade is off your report, but you built up that time to get your credit score back up. It'll initially drop, but it'll come back up after 60 days. That's normally the rule. So paying off your stuff is great, right? And it'll stay on there on your report as a paid off entity, right? So it's your history at this point. But you don't want to get scared to the point where, dang, man, I don't know, my score's gonna drop. So if I pay this off, I'm up the creek. That's okay. You wait 60 days, your credit score will go back up to where it was. It happens all the time where consumers are worried about their scores when they pay something off and they want to linger on to that last little bit so they can have the history. Go on and pay it off, that's fine. It'll drop initially, but it's gonna come back up. That's okay. It's almost like having an authorized user account too. If an authorized user account is helping your score out, that's fine. But when it drops off, you know that your score is gonna go down as well. But if you pay over time and keep that history, it's gonna go back up.
Great, and we're gonna wrap. Well, did you want to add something else? So this is one final question we have here, and kind of get back to the point you were talking about with the credit card. So what are some resources or tools that business owners can use to monitor and manage their credit profiles more effectively?
So one of the things that you can use is, we're gonna do twofold, because we wanna make sure that we're very credit educated and knowledgeable on this. So my FICO is gonna show you what the bank is looking at, because one of that's a FICO 8 and FICO 9. One of the things that you wanna think about is, when you're talking about your credit scores and what you're looking at, most people are like, well, I don't want to pay to use my score, so I'm gonna get, you can use things like Vantage scores of Credit Karma. But just know that Credit Karma could be up or down. So that could be, it may say 720, but don't trust it. Because when the banks or a CDFI look at it, you 642. Now the interest rate and all the things is a different variable. One of the other things that you also want to think about when you're talking about what can you use is not just to look at the FICO scores, because you got a bank score, an insurance score. When you're looking at all of those scores, and you're a car score, when you're looking at all of that, most people are just looking at that one thing. They're just trying to make sure that, oh, I met the minimum. But what if you fall out of the minimum? Now you're no longer credit worthy. But you also want to think about, what is the bank looking at? The bank is looking at, you can look at FICO, you can look at Credit Karma, but they're looking at your LexisNexis. Because everything about you is on your LexisNexis. The data, they can tip. You forgot about that phone number that you had way with T-Mobile, but your CoreLogic. But guess what? Innovis, Sage. We're gonna run these down. So because we want to make sure that you can get to lunch. But LexisNexis, SageStream, Innovis, those CoreLogic, those are things. IntelliCheck. Because a lot of times we're like, I'm not worried about that. I didn't pay that bank way long time ago. They closed the account. But guess what? Now you're more financially savvy, and you want to go to a more traditional bank. And then they say, well, you owe 40, you didn't pay this back $420. You're like, man, that was like 20 years ago. Y'all should just let that go. No, your credit, that LexisNexis and all of the other three that they said, they're telling that banking institution or that micro lender where you are and how do you handle things. And just because, and we just want to dispute this, because I know that there's a lot of people who are doing credit restoration, credit repair. Just because they remove it from your credit report does not mean that the banking institution or that micro lender cannot see it, because they're going to look at your LexisNexis. And if you've never looked at your consumer and your business LexisNexis, because yes, you have two. You have a consumer LexisNexis and you have a business LexisNexis. So I would challenge all of you to pull both of those reports. Go ahead and sit with yourself. Make sure you don't have anything to do 30 minutes to an hour after it, because you're going to sit here and figure out, because you're like, I forgot that I lived there like 10 years ago, or how did they know this? They have everything that you've ever done with your name and social security number, insurance, medical, anything that you can think about, they can see it. So I would challenge you every 12 months to look at your credit, LexisNexis, business and personal. Lastly, I will say this to you. that it would behoove you to not look at your credit reports, especially right now, because this is a time during the holidays and at the top of the year that collection agencies that you forgot about or you kind of wrote off, they will pop back up on your credit report, because guess what? They understand that now is a time that you're trying to put yourself in a position, because have you ever noticed that you will get, this thing was removed from your credit report, and right between now and tax season, they come back, that thing will pop back up on your credit report, and you're like, what, how did this happen? Because they know that now they have the upper hand. They feel that they have the upper hand. So it's important, not just from that standpoint, from a collection standpoint, but also from a identity theft, because identity theft happens especially during Q4 and Q1, because many times we're doing a lot more online. We're putting a lot of our credit information on the internet. So this is a time for you to really be able to protect your credit. And if you haven't, look at your credit reports. We're gonna make sure that we continue to be able to share things, but we're here to be able to help you all. And Terrence, we'll turn it back over to you to close us out.
Awesome. Okay, awesome. Okay, are there a couple questions? Anybody have any additional questions? Yes.
So, of course, this is a wealth of information.
Got more for you.
Yeah, so, how do we stay connected with you all to help, thank you. So how do we stay connected with you all in order to make sure that as entrepreneurs that we're able to get this education, to get this wealth? Because this is very helpful, not even knowing, for me, it's like personally is different than business, and not knowing that your personal business has a lot to do with your business itself.
So one of the things that I would say is to make sure that you join the chamber, because we're going to continue to be able to bring educational things like this. But Jay, Linda, and myself, we're on social media. We're on all the platforms. We don't mind sharing our information. The one thing that we are here to be able to do, because we all traveled to be here, is that we want to be able to make sure that we can continue to be able to share our knowledge. So reach out to us, follow us. Jay and I always say this, our DMs are open. We get DMs all the time. Make sure you're on our email list, because we give a lot of free information. We both have online communities where we come in weekly and monthly, and we each have our own online community, but then we collaborate on those things. We offer free workshops and education throughout the year. So there's a lot of master classes that we host to continue to be able to educate our community, and that's Black and brown. Not saying that we don't serve everyone, but we know our area of focus, because we know where our paths align. But definitely can continue to connect with us. But one of the things is your best resource is to make sure that you could continue to connect with the chamber, because we're connected to them.
My bad. So sorry. She is right. She is right. You can connect with us on social media. I do have also coming out probably next week, like an ebook that has a lot of stuff in it too for credit. So just stay tuned to what we're doing, and then our social as well. So yeah, that's it.
And Linda, even though we will say this, she's known on social media as a credit confidence coach.
Awesome. Well, great. Well, this was a great panel discussion. We want to give our panelists a round of applause. Thank y'all for your questions. I'm going ahead and we'll ask the panelists to stay, and then we'll pass the awards now and get a picture.